Look, that's always a question we ask ourselves. Why is something cheap? I mean, if I talk to you about our position in Woodside, I mean, we like the company because it has a very high quality business, a strong balance sheet, and we're really quite excited about the recent acquisition of a greater share in Scarborough. The reason for that is that it's a business which is very capital intensive upfront, but after that it's very cash flow generative with very low maintenance capex. Scarborough is an asset that allows Woodside to plug into some of their existing infrastructure. So it's a brownfield, and that means that they have to spend less capital, and it greatly extends the life of those infrastructure assets that they have on the ground already. It will cost a reasonable amount of money, probably $9 billion, but Woodside can handle that using its existing balance sheet. If they were to do browse as well, they would have to come to the market. We also like the position of gas. There's a lot of concern some years back about an oversupply of gas. It's very clear that China's demand for gas is increasing rapidly. The government has a target to increase its gas use by about 15% for the next few years running, because it serves two purposes for China. One is to move away from coal, which is very dirty. It halves the carbon dioxide emissions per unit of energy, and also it diversifies their source of energy, which is something they're also very interested in doing. Lastly, we do see some upside in the medium term from the fact that there might be a delinkage of the gas price in Asia from oil. At the moment, those gas contracts are priced on an oil equivalent basis, and the linkage is usually something like 13%. On a calorific content basis, gas has about 17% of the energy content of oil. So if we eventually saw the establishment of a separate Asian gas market, there may be some improvement from the price quite independent of the oil price. Now, it's not certain that will happen, and it will take, if it does happen, some years, but it's a potential positive. I think the last thing I'd like to say though is that, if you probably interview a lot of fund managers, and a fund manager can always say good things about the stocks that he owns. And in fact, you can always say bad things about any stock that you own. Really, the point about is not so much that you can say positive things. It's all about what is the price compared to the facts on the ground. Sometimes, of course, as we know, and we as value managers are particularly aware of this, a company with a lot of bad news, and sometimes even a bad company, can be a great investment, and a good company isn't necessarily a good investment. So I caution everything I've said in those terms. For us, it's the trade-off between the price and the facts on the ground.